Nice.
Hey, Bloom, is JC recording this?
I don't know. Is he around?
Okay, let me ask him.
Hopefully. I want all the classrooms to be... We have a set, right?
You really got a Lambo?
No. Yeah, right. 6
No,
months.
are you crazy? He has a Pontiac Sunfire.
Oh, souped up. Oh my God.
Souped up with a flower on top.
Souped up.
You got a bucket?
Baby.
Excuse me, guys. What channel will you be using for this class?
Bloom Place.
We're going to post it on the trading floor for you. You just have to click the link and it'll automatically take you to the Bloom's Play channel.
Okay, thank you, guys.
Okay. So we'll start in 2
Let
minutes.
me, 1 second. Let me just see if JC can stream this.
Hopefully. Oh my God, please let me log into this. Okay.
Oh my God, I hope JC is there. He's green. He's online. Yes, he's typing.
What's my web?
Oh, stream's already on, guys. Stream's on. You can go for it.
Okay. So let me give it another second here. So make sure everyone has sound. Live lessons needs to be moved to live trading. Everyone's in live trading, right? Live trading. So if you can't hear me, make sure you can. Okay. Is Vegas around or not?
Yeah, I'm here. I am here. You hear me?
Okay, so let's everybody in class, let's mute. For only those who is necessary, just mute.
Are you kidding me?
Push to talk, please.
I'll start muting him.
And that's PR, right? So what was that stock? NVAX, right? Okay, good. Are we?
We're good.
Okay, let's start class. Did you want to start, Vegas, with anything? Or should I do the intro?
Go ahead, buddy.
Go ahead. It's all yours.
Okay. Okay, so let's review. So this is week 2 of the 15-week classes. So week 2. So this will be on support, resistance, congestion, consolidation, right? Consolidation, trend analysis, and the fancy term that the professors and the technicians use is trend studies, but we'll just use trend analysis. Okay, so that's what we'll do. Okay, I hope you guys finished the homework. The homework assigned was Adam Koo, right? You guys finished the homework? Watch. Who didn't watch it? Say now. Adam Koo, Trade City, right? Provided the how to draw support and resistance, and Dr. Elder did the psychology, right? That was the really important one. That video, that audio book. Okay, so whoever didn't do the homework, say so I know to put you into detention. Okay, good. Okay, so as you know, okay, so everyone's muted, and please, if you have questions, just post it in the main room. This room here, just post it and we'll go back and we'll try to answer those questions as we go, okay? And I always like to start off with the mission and vision statement so I can remind myself and remind you guys what the trading community is about, how we conduct ourselves, why we do the things we do, and just a little bit about ourselves. Okay, so here's the vision. The vision of United Trading Capital is to deliver the highest quality of care and superior returns across all disciplines of the capital markets in a diligent and prudent manner to inspire the next generation of professional traders. Okay, and the mission, the purpose why we have this community is to become the world's leading network for institutional and proprietary trading through mentorship with a lifetime goal of independent wealth and continuous pursuit of philanthropy. Meaning everything we do from this day on forward will be free so that each of us can sustain ourselves, provide for our family, our friends, and have that extra cash. Okay, this is a skill that you can always lean on. So I hopefully this class will finish in 45 minutes. Okay, first I want to go over one other thing. Is it this one? Conduct. Can you post the conduct, TJ? Really quick, the code here. Okay, so we do have a code of conduct. Okay, I don't want to go over in detail. I want to go over the second bullet. Place the integrity of the investment profession and the interest of the public above our own personal interest. Okay, that's very important. Okay, we have quite a bit. We have selected executives and junior associates. Okay, we're all volunteers working together to protect the integrity of the capital markets. Okay, we are trading to make money against the smart money. Okay, the institutions, but we are not manipulating the market. We are not doing pump and dumps. We don't have secret rooms or secret chat rooms or anything. Okay, everything we do is free and clear, honest, and we don't want to deceive anyone. Okay, and the key here is the interest of the public above our own interest. Meaning, I'm Superbloom. I have a portfolio of $500. Okay, I'm not gonna ever deceive anyone in the market so I can make another $100. I'm never gonna do that, and you shouldn't either. Okay, so that's just a review of the code of conduct. Okay, so let's talk about support and resistance really quick. Actually, at this point, Vegas, do you want to say anything? Did I miss anything? Or TJ, did you want to quickly drop anything regarding anything right here?
Just to add on to that code of conduct, your reputation is everything, right? We spent years to building it, and in a second, that reputation can be, demolished, right? So we really value our reputation. So,
oh, baby, be careful, okay?
Sorry, I'm just meeting you. So just make sure you keep it clean. Please don't front load and be transparent. We don't mind that you're in a trade, and you can call it out like, hey guys, I bought this ticker, but just don't just be like, oh guys, buy this ticker. Be transparent. So be like, hey guys, I bought this ticker at this price. I think there's still movement up, or, I'm buying this ticker. Here's my entry. That's all we're asking. We don't mind that you bought it earlier, as long as it's disclosed.
Yes, transparency and disclosure, right? Okay.
I just want to add one point and then I'll pass it over. But obviously, if people are going to go take a trade, clearly you're not just jumping in. I'm assuming that most traders hopefully are at least looking at the chart to make a decision if they're going to enter a position. So if you're even doing that, you should at least share that you're planning to take a trade and here's your entry point. There might be others that are interested in the same ticker that would probably maybe consider joining if they like the setup on the chart. I think sharing that you're in a trade after it's gone up 5 cents, 10 cents is useless. And I think it's disadvantage to other members of the room. And I think that if people want to be having integrity and respect, which we like to do, and we like to still have a good time, You need to give people, if when possible, a heads up on a potential entry point on a trade you're looking at, so everyone can hopefully participate, because the goal is to make money together. So if you're going into a trade and then this thing runs 10 cents or more, and now everyone else finds out you're in it, what good is that? The only one benefiting really is you, and that's very selfish. So think of it, team. Think of a good setup. I mean, even when I see people post things, I got to tell you, I check all the charts, because I always want to make sure that the setups that we share here are authentic and that the charts are solid. I will never take a trade where the chart is not good. And sometimes the volume may not be that attractive, but at times the setup is right and the volume will come at the certain entry point. So Superbloom will talk about support and resistance tonight, and you'll understand why a lot of times I will share the idea with the price. And people question me sometimes and wonder, why is she waiting so long to enter this trade? There's reasons, and Superbloom will talk a lot about that tonight. So thank you very much.
Okay, so that's good. Okay, and just before we go on, remember, this is different. Our trading community is different from every other room that you've been through, because we are, I would say, proprietary traders and professional traders trading on live. We're trading live. Really, we come to work and we trade live, okay, to make money. This is our full-time job, okay? I mean, everything we post in the trading floor is our trade ideas. These are setups that we're looking to enter, right? This is not a subscription service. I am not sending you an email or a weekly text or a daily text to tell you to go buy something. No, I'm letting you know what I'm thinking, and then you can make your own decision. This is why these classes are there. So you can become the trader that you will eventually become, and then use all these lessons and then build that strategy that you need to become the trader. Okay? Okay, so that's it. That's enough of that. Okay? So I'm assuming everyone has done their homework, okay? So just to quickly, here we go. Support resistance, really quick at the bottom line there. Support is generally an area, like this is this on this picture is it's a line, but it's actually buying pressure. Okay, that's critical in learning this. Is buying pressure. There is demand. Is in technical analysis is also known as the demand zone. Okay, let me Google that here. Okay, I'm not making up these terms. These are real terms. Okay, look at it. Look at this chart. See that blue area? That is support. That is the demand zone. The red part up there is resistance. That is the selling pressure. That is the supply zone. Okay. The reason why it's called demand is we want this. We demand it. We want to buy it. We want to accumulate it here. Is that fair? Is that a good definition? Resistance is where the selling pressure is sitting, right? It's where people want to sell at. People want to distribute their supplies. They want to let go of their stock. Okay. So the first thing that you need to know as a beginning trader is support and resistance is not just one line. Okay. Be familiar, be ready for that. If I say support at $2, support is an entire region of maybe $1.90 to $2. People are buying in that entire region from $1.90 to $2. Does that make sense? So let's understand that first. It's a region. Okay, support and resistance. That's probably the first thing once I recognize that, I'm like, oh, okay, this makes a lot of sense now. See? So let's confirm with this picture. Resistance is the zone and support zone, right? Okay, so that's that. Easy, right? Anyone lost at this point? Okay. So I want to take one step and talk about the psychology of how this works, okay? That's why it was critical to talk about so you can understand what charts are. Charts and technical analysis, in a way, is just a graphical representation. It's a survey, actually. If you actually listen to the entire audiobook but you probably didn't, it's fine. The audiobook, Elder explains that technical analysis is just a graphical representation of people's emotions and where they're buying and selling. You could tell by the chart where they're buying and selling, where they want to sell, where they want to buy, and how much demand and how much pressure and all that. You could feel the emotion in the chart, okay? So let's focus on this picture for now. Okay, so important thing here. So let's look at this picture, the support area. I want to make it clear here. So first of all, in this area here, okay, this is how I'm going to explain it, okay? This is how this chart's going to work. Look, we're going to tell a story together, okay? This is the first area of support. This stock is tanking. It drops. See, notice that, look at this chart carefully. It gaps down. It gaps down. Do you see that? It gapped down. There's a gap there. Do you guys see the gap? Okay, so it gapped down. Buyers start to step in that area. Buyers, me. Let's say it's me. I'm buying here, okay? The stock starts to rip. Okay, I bought it here. Okay, the stock starts to rip. Okay, it goes up towards resistance and it goes back down to support. Guess who's buying? Guess who's buying there again? I was the first one to buy it. Let's assume that I was the first one to buy it here at point 1, at point 2, at point 2 right there. Guess who's buying it there? Why does technical analysis work? Why do we always buy at support? This is from the psychology stuff. You guys have to understand the psychology so you guys could overcome the fear and the emotions that trade with it, right? Why? Because if I bought in this area in October, look at this chart closely. If I bought in this area in October and this stock starts to rip, what's the first thing that I feel? Explained in the book. Regret. I'm regretful that I didn't put $1 million into that stock before it ripped. I'm upset now. I'm angry. Regret. So when it goes to resistance, it hits resistance. There's some selling pressure. We'll explain that later. It drops down, right? Back to support. Who's buying there? Who's buying there now? Me, again. Why? Because I want to buy more in December. I told my wife in October, I said, hey, baby, I bought this stock at $32. It ripped to 42. She's like, why didn't you? Oh, wait, I will buy more. December, when the stock comes back down to 32, I buy at 32 again. Right? 32, it rips to 42. What's the first thing you feel? Right? You want to buy it there again. But how does technical analysis work here? How does technical analysis work here? I'm buying here, but who else is buying? You guys, right? You guys are traders. You guys are saying, okay, I know somebody bought in October. I know they're going to buy again, maybe in December. I will buy it with them. I will wait here. Is that clear what I just said there? Is that clear how I explained that? I want to make sure that you guys understand that, the psychology. I'm explaining the psychology in my own terms. Dr. Elder, when you listen to his audiobook, he explained it in his own way. But I'm explaining it to you in a way that you can now understand. Is that fair? Okay, so let's go to area number 3. Right here, right? Area number 3. And look at the explosion again. Look at the explosion on number 3. Okay, number 3, what's happening? It says, okay, honey, you're making a crap load at $32. Why don't you just keep buy us a house? It's like, I go, okay, I will go back and buy it again in March. What happens again? More traders are now trading this area. Is that fair? Is that fair what I just said? There works. That's why we always only buy at support. Okay? Like when support, right, goes up, we can see that. And look at the explosion on number 3. More people are buying in March, causing that explosion to go rip through resistance. It's actually breaking through 42. Is that fair there? It's actually breaking through 42 there because more people have joined in on this. See graphically who's been buying and selling what. So you could technically see in the chart who's buying what. Is that fair? What? Is that clear what I just said there? How I explain that? I get that. I get that people are buying there. They're coming back. Regret, right? Greed, hope. They hope they can buy more. Okay, so that's support. That's why the buying pressure is created there. People come back from exactly. They come back from the past. They remember October. They bought some in December. They want to come back and buy more in March. Is that fair? They're creating the support area. We are now creating support. Okay, so that's support. So let's go back to this picture again. Is it possible that in March support is broken? Okay, let's look at this picture again. Let's close in on this picture. Click this picture. In support, is it possible that in March, this this area of support is broken? People, I come back, I buy it at $32, but the week after 29, 27, 15, 10. Is it possible? Yes, it is possible, but why is it possible? Explain why to me. Why is it possible that support is broken here? This is psychology. I want you to understand the psychology first before we go to the technical analysis. Why is this possible that support is broken here? No, because look, I bought it in October, I bought it in December, but what if I go on vacation in March? Me and my wife, we're the ones buying that support. We go on vacation. I'm not there to buy it anymore. I'm not there to hold the price up at 32 anymore. I don't have a limit order at 32. I don't have it there. That means you could jump in and you could buy it at 32, but you're missing one person that's been accumulating there. Me. I'm not there anymore. Is it possible that the guy that bought that support last week is no longer here this week to buy that support? That's really important when I just asked there. Is it possible that support is broken because 2 weeks ago, the guy that bought it at support last week, 2 weeks ago, is no longer here this week to buy it at support? So is it possible? Yes, it is possible. That's why support can be broken, right? Based on that, should you always have a stop loss? Yes, because you don't know who's buying there or not. Nobody does. Is that clear what I just said there? Now do you guys understand how this is working? You guys are like, this will answer the question. Guys, do you think support will hold? Or should I buy in this area? We don't know who's going to buy it there. We have an idea, a probability. Okay, so in Adam Klu's book, so in this area again, resistance area, right? No, this support area. It bounced off the support zone a few times, like 3 times, primarily 3 times. That's pretty good. The rule is if you can connect 2 swing lows together, two points in one chart, like if 2 points touch the line, it's good, but more is better, like 3 or 4, 5 times. So this actually touched 1, 2, 3, 4, 5 times in this support zone. So we know that in this area, it was tested 5 times. The couple who accumulated in October, who bought in October, bought in November, bought some in December, bought some in February, in March, bought some. And we don't know for sure if they're going to be back to buy some in July. We just don't know. Is that fair? How support is? Okay, so I explained support. Did I lose anyone in that? Did I lose anyone? Hard to lose because you did the homework. Fair? Okay. Okay, what emotion drives that? Regret, right? You were regretful you didn't buy as much. Okay, so let's go back up now. We have to focus on the psychology a little bit, and then we can go to charting, because I know you guys are like, oh, I know the psychology. I'm really smart, and I know everything. Okay, good. Okay, resistance. Actually, before we even go to support, actually, no, not yet. Okay, resistance, what's happening here? What's happening at 1, 2, and then 3? Why is price being rejected there? What's happening at price here? Why is there selling pressure at resistance here? Who knows? Right? I'm gonna change. Okay. Okay, look. Let's go back. There's 1, 2, 3. Those are areas of resistance. 1, 2, and 3. $42. Look at the line. $42 is the area of resistance. Okay. Look at the blue circle I circled there. Those people who bought there at 42 at that gray line bought it at support. Does that make sense? Look at that. Okay, I don't think you guys understood that here. Let's make this clear. Clear as mud. See this blue line here? This blue line? What is this line here that I drew? What is this blue line that I drew? It is what? It is support. It's a previous area of support, exactly. So in that area, in that blue circle, what's happening here? Some other guy in another city in China goes, okay, baby, I'm gonna buy at this area of support again because I'm gonna be rich. And he buys it there without a stop loss. He buys it at 42. It breaks support. It gaps down. What happens to him? His wife comes back and says what to him? Okay, I want you to break even. Okay, you're losing money. Some guy in Canada and his wife's making money. You're losing money. So what happens? He waits October, November, December. December, the price goes back up to 42. What happens? He's trying to break even, isn't he? He's creating the selling pressure. The bag holder that was holding before is now dumping. Is he not dumping? He's dumping there. Is that fair? This is how the psychology of the market's working. This is an explanation of the market, isn't it? Okay, let's move on. What's happening in number 2? Price goes down to support, bounces back up to resistance at area number 2. What happens in number 2? Yes, the same guy. What's happening in number 2? A couple things, right? The guy who didn't buy, who bought it at 32, who didn't sell at 42 in October previously, now he's regretful that he never sold it at 42 earlier. So he wants to sell it high of day again. Is that clear? Maybe I didn't explain that properly. Sometimes I know that I didn't explain it properly here. So let's focus on. Okay, so I just want to new picture. I know I'm butchering this. I need technology, right? Okay, so area 1, area 2. Okay. So what's happening in area 1? Area 1, the guy in China, right? Remember that guy in China wants to break even at 42. I get that. Okay. In January 2000 and bounced back up to that area of number 2. What's happening again? Here's what's happening. The shorts, the bears are not coming. They're sitting there. They're waiting to attack. If this doesn't break, I'm shorting this back down. So now you have the bag holder from China. You have the bears waiting to short, right? Adding the selling pressure. And you also have the guy that bought it at October who didn't get a chance to sell it at high of day at 42, wanting to sell there. Does that make sense? If you bought a stock at $1 and it ripped to $2 and then you didn't get a chance to buy it and it goes back down, what's happening? You instantly call your friend and say, crap, I wish I sold it at high of day. Right? This is what's happening there. So in this area, number 2, it's actually more resistance, more selling pressure. Who else wants to sell? There's so many people that want to sell there now. Okay? Is that fair? Does that explain the psychology? I mean, in the end, who cares where people are buying and selling? Like, who cares why people are buying and selling? Like, in the end, who cares? But the psychology is that's what's happening, right? It's all emotion. It's regret that's driving it. You are regretful that you never got a chance to sell at high of day. Tell me in this chat room, how many people every day, crap, I didn't get to sell. I didn't sell it at the top. I panic sold. How many? And then you wait all day for high of day. And then when it goes to high of day, you sell it. And then it rips through high of day. And then when you say, crap, I want to buy it at support. I want to buy it at high of day. High of day becomes support, right? Right? High of day is $1. It rips right through it. Now high of day becomes support because you sold it at high of day. Now you want to buy it at high of day, right? Is that clear? That's why support and resistance are in fact what? The same line, the same region, right? Support and resistance are in fact the same line. Did I okay, I probably missed you. I probably lost half the class there when I said that. Okay, so let's go back up. Okay, you guys understand this is why I gave you the supplementary homework. Okay, this blue line. at one point was support. Okay, now look at it. At point 2, it's now resistance. Okay, so this is how I'm going to draw it. Okay, look. Okay, look. Let's look at the picture again. That blue line across at $42. At one point, people were buying there at support, right? And then once support broke, it became what? Resistance. Is that fair psychologically what happened? Because the guy in China who bought at 42 was like, okay, God, I'm making so much money. Now I bought it at 42, it tanks, it breaks down. He's actually the one that says, no, when it comes back to 42, I am going to sell to break even. I'm going to be the guy to break even. So that same exact region is now resistance. Is that clear what I just said? That is critical in trading. If you do not understand that support and resistance are the exact same area, you cannot trade. Support and resistance is actually the key of trading. You can only buy at support and at resistance, okay? So I'm going to move on to the next subject now. Did I lose anyone? So at this point, write down in your book, I actually don't understand what Superbloom just said. I need to review his homework, okay? Is that clear? Okay. Okay, why is it that when resistance, before I go on here, when resistance is broken, right? When resistance is broken, it becomes an area of support. Why is it that when resistance is broken, it becomes an area of support? This is now resistance, right? This is resistance. If it's broken here, it now becomes... No, do not answer the question here. Just put it in the thing. Okay, this resistance area, right, at 42. You wanted to sell at 42. Now you sold it all your shares at 42, but this thing keeps climbing. This thing to 44, 45, 47, 50. What happens to you? You're like, crap, honey. I am the baddest. I'm the worst trader in China. I'm pissed that it went to 50. I will put in a limit order at 42. So when it comes back down, I'm buying. The exact same guy who's selling before is buying. This is why when resistance is broken, it becomes support. When support is broken, it becomes resistance. Is that fair? So that's critical. Okay, so that took me 15 minutes. Okay, so that's support and resistance. That's the psychology behind these markets, right? And the takeaway is that these are areas of transaction. People are trading in these areas. These are quote unquote sticky areas. These are where the price must consolidate and trade at. Price action will be most reactive near these areas. Okay. Okay, so so that's that. So let's talk about consolidation. So let's say this is a chart that we see, okay? That's a chart that we see, right? That's just a chart. Somebody posted this chart. This is ABCD, who knows, okay? But right away, when you look at a chart, I want you to write this down, okay? When you look at a chart, you are always draw these two lines here, right? What are we drawing here? What are we drawing here? At every chart, what are we drawing? We must figure out, come on, hurry up. We must draw the support and resistance. Why do we need to draw support and resistance? We need to figure out who's buying what where and who's selling what where, right? Is that not fair? That's why in the chat room you guys like, why are you even in a chat? We want to know who's buying what where, who's selling what where. Isn't that what trading is all about? Like, I'm gonna buy. I want to make sure that when I buy, somebody's gonna buy it with me, so it goes up, right? Remember, if you buy a stock at $1, you can only make money if somebody will buy it at 101. Is that fair? What I just said there. When you buy a stock at $1, you can only make money if somebody will buy it at 101. So you could sell it at 102. So you need to figure out who's going to buy next after you. You need to draw these lines. You need to draw these areas where people are going to buy at, right? So as you draw support and resistance, you create areas of consolidation or congestion. Okay, they're actually okay. So in a lot of books, they explain consolidation and congestion as the same word, like the same term. Stocks. So in this same picture here. So in this same picture that I drew, if you look at it, the stock rips in August. It rips straight up. Okay, it rips straight up. It hits an area of resistance. It goes back down and it trades sideways. So we're gonna call this. This stock is consolidating, right? The verb, right? This stock is consolidating, verb, right? But the area that we like to call this is congestion. It's trading in congestion. The reason why it's called congestion, and this is explained in the trading psychology audiobook, is that look at the emotion here. People don't know where the stock is going. People have no idea what's happening. They're panic selling. They're panic buying. They're emotional. They're buying at right in the middle. Look at the price. It's from 310 to 340. People that buy exactly at 330. Okay, people that buy right in the middle of this chart. Okay, this is why it's so critical. Okay, people that buy right here in the middle of this chart. Okay, bad line, but bear with me, right? People that buy right in the middle of this chart, they are waiting for what? They're waiting October, November, December, January, February for what? Nothing. It's going up $5. It's going down $5. It's going up $10. It's going down $10. That's not enough for them to break even. This is a $320 stock. They had to buy 100,000 shares to even get some profit out of this, right? Or 10,000 shares or 1,000 shares, right? When you buy a stock in the middle here, nothing's happening. This is an area of quote unquote indecision. Okay, if we pull this chart up really big into the or even the yearly, this would look like a doji actually. In fact, okay, this is an area of indecision. This is consolidating in what we call the noun, what we call congestion. Okay, it's trading sideways. Nothing is happening here. So this is the rule here. Never your support and resistance line on any chart and you figure out what's in between. You're going to recognize that in between and selling going on. People are actually just panic buying and panic selling, and people are accumulating some, but they actually don't know what's going to happen. Okay? Yeah, let's go back up here. Did I finish everything? Did I explain congestion right? I mean, Dr. Elder in his audiobook, he explained congestion really well. It's just an area where people are buying and selling shares with emotion. They're panicking really, right? Because they actually don't know. So let's go back to this area. So we know, let's hammer this topic home here. So this in the middle here is congestion, right? If we, this area here is congestion, right? This area is in congestion. Why? Because if you look at this chart carefully, if you bought it at 37, if you bought the stock at $37 and it goes to 40, are you going to sell? What happens if you sell there? You're going to cause that resistance, right? If it goes back to 34, you're going to buy more. Like, it's basically what I'm trying to say is there's a lot of, it's not a clear-cut directional move where the stock is going. People that sell in this area will end up selling too early or buying too early or sell too early or sell too late. It's all emotional, right? And I will explain that in, wait. Sorry, I need to put this here. One sec. There's a piece of material here that I want to show you. I didn't make this picture, but it's critical now that I show it to you to hammer home this topic. Okay, so here we go. Okay, let's click on this picture. So left, did I explain to you what support and resistance is? What's in the congestion? What's happening here? A, entry out of greed. A. B, exit out of panic. C, exit out of fear. Does that make sense? People that trade in this area have no idea what the hell is going on. They're not disciplined. They're not patient enough to wait for the entry at support. Look at the rules. always buy at or near support. Number 2, always buy over the break of resistance. Why is it critical to always to buy over the break of resistance? There, based on what I've told you. Okay, based on what I've told you. Why is it? Okay, so no, why is it important? Let's look at that picture again. See that area of resistance, that line there, that support? The people want to sell there. There's selling pressure there. Why are you going to buy it? Look closely. Are you going to buy it at C, knowing that there's going to be people dumping it on you at those arrows? Are you going to buy it at C, knowing that there's going to be selling pressure? As soon as you buy it at $2, you know for sure that at 202, people will start dumping on it on you. Would you buy it? Would you buy it there? You wouldn't. You would not buy it there. You would not buy it there. This is why when we trade, Vegas goes, I'm looking at this stock, right, at 245 over, right? She goes over 240, over 201 idea. What does that mean? 201 is resistance, right? Right? We want to see the 201 broken down, selling pressure gone, right? We want to see that selling pressure go away so we could safely get in at 205, safely, meaning that once we get in at 205, there's no more selling pressure. This should be going up. Is that clear how this is working? There's a lot of psychology behind this, right? Okay, what happens when resistance is broken? Why is there an explosion at resistance? Why is when resistance breaks, this thing goes up drastically? What's going on here? Psychologically, what's happening here? Okay, let's go. Let's go back to this picture. What's happening? Right here. I'm going to point it out right there. I'm behind schedule, I think. Okay, look. See, that blue line is resistance. It's finally broken at resistance, okay? Now we get in. It's finally broken at 340. Now we get in, okay? We get in now. What's happening? Why is there an explosion going up? It's because, exactly, the shorts are covering. Those shorts who were shorting there before in December, look at the chart. In December, they were attacking. They were shorting here, right? They were shorting this down, are now covering. Are they not covering? When they cover, they have to buy the stock, right? They're causing the buying pressure. What else is happening? Retail, they're jumping in. FOMO, fear of missing out. Greed, right? They're all jumping in. They're all jumping in to create this buying pressure, this explosion, right? That's why it's so important. I must wait for the selling pressure to go away, right? Sorry, I have to go back to live webinars again. Is that clear there? Does that make sense? Oh, it's not there. Okay, that's fine. Okay, so that's fine, right? So that's why there's an explosion there. That's why, so for those who are new, when resistance is broken, there is an explosion upwards, right? Because of fear of missing out. Shorts need to cover, and plus us, the day traders who are waiting there to press the mouse, to click the mouse to get entry. We're all creating the buying explosion. Is it possible that when the resistance is broken, nothing happens? Is it possible that nothing happens there when resistance is broken and nothing is happening? Yes, it is possible. Of course. Because if the day traders who are supposed to be trading this go up on vacation and not buying there, and the shorts who are covering there are on vacation and on some island, and he's actually going to be losing money, he's not covering, yeah, it's possible that nothing happens. It's very possible. This is, you're trading against other people. Is that clear? It's very important, okay? So I want you to ponder this a little. When support is broken, what's happening? Why is when support an explosion? I'm not, but when again, why is there an explosion downwards? Why? Same idea. The shorts are now adding to their short, and it's becoming resistance. I am going to attack. I'm going to short this area. They're attacking, and what's happening? People are panic selling there, down support, right? Panic selling. Support just broke. I bought it at 42. Now it's at 39. I'm going to all that selling pressure, right? Same idea. Is that fair? What I just said there. I don't have a picture. I think I'm butchering these pictures anyways. Okay, so that's the psychology of that. We talked about congestion, do not trade. I showed you that picture of the emotions, right? You could read on the side there. A trader, okay, if trading in the dead zone, I call it the dead zone, the word that I, coined to myself, but you guys call it whatever you want, right? Just don't trade in there. Yes, and sometimes I trade in there too, and yeah, and I panic sell. That's probably why I panic sell. Okay, so I'm gonna put this picture to hammer home the congestion area, and then we'll get a few charts together, okay? Read this closely. I didn't make this up. I'm not a genius. Somebody else is a genius. Look at this. Congestion, price congestion, warning signal, bouncing off support, bouncing off resistance. Serious, look at the box. Serious congestion started from the beginning of the session. Warning. Catching this breakout was tough. Okay, buying over the break of resistance, catching the explosion and riding this way up. Is that fair? So if you see a stock trading sideways, what's happening tomorrow? You are not going to buy it there. You're gonna sit there and wait for the resistance to break. Okay? Okay, that's that. So that's the psychology behind it. Psychology of this congestion, consolidation. We talked about that. Consolidation, just to be clear, it is actually a break or a pause in the overall move, right? So that's where this picture is. That's why this picture is important, right? It's actually, right? It's a pause in a bigger move, continuation. So that you guys understand this, so that when you do your chart analysis, you could recognize where the big move was, why is it consolidating, and will it continue or reverse? That's exactly what we're always looking for. Where are people buying at? Where are people buying at? Where's the area of consolidation so I don't buy it there? Where do I wait for the break of resistance, right? See that blue squiggle line? That's consolidation, right? This is taking a break. What's happening there? Profit taking, panic selling, panic buying, and then we wait for the break of resistance, and then it grows, and then we jump in, okay? So that's that. So I went over those, talked about the psychology. Okay, so let's do the technical analysis for the last 15 minutes here. Okay, let's do it for HTGM. Okay, so here's the chart. And then okay, let's do it for HTGM. Let's do it for HTGM. Oh, someone's on YouTube. Okay. Let's do it for... Can someone mute that? I think there's an echo. Okay, so here's support. Here's resistance, right? Okay, so here's HTGM. Okay, those are my areas. Here, this is very important in your learning career of trading. That's my areas of resistance, okay? And those bottom lines are my areas of support. Those are my areas, okay? It's very possible that you are a trader and you draw different lines than me. There are no right and wrongs here in trading. There isn't, right? I mean, there are better lines that you can draw. Darn it. Okay. So here, it's very possible that you draw different lines than me. Price line. Let's say you draw, say you draw this line, and say you draw this line. Okay, that's your line. Say you draw this chart. Okay, I'm gonna show you something. Okay, so the rule to trend line analysis is this: trend studies is at least connect more than 2 points on one line. That's all you gotta do, because basically we need to find out who bought before and will they buy again. So there's 2 points. Who bought before? Point A. Are they gonna buy again? Point B. Right? So there's 2 charts that I drew. My chart, the first one, and then your chart that you drew. Look at your chart that you drew. Those are your lines that you drew. Okay? Those are your lines. But the same idea. You're connecting the dots. Same idea. It doesn't really matter. But as you get better, you're going to be able to draw the one line that defines the chart. So that's really important. You're going to draw different lines than other people, okay? But you're going to have to learn to draw the line that has a lot of volume and is most validated. Okay, write these terms down. Validated again by volume, right? Bounced many times off support. Okay, so let's look at your lines first. Okay, so you drew support at 208 and 202, and you drew it here, and that's resistance there. Okay, so that's resistance here, resistance, and here's your support line, okay? Right? That's what you drew. Right? That's your support lines, right? That's fine. There's no right or wrong. But how do we validate that your line compared to my line? We look at the volume. This is critical. One second here. What's going on here? Damn it. So we draw it on the daily chart, right? These are your lines. These are your lines that you drew. Okay. So here, the lines that you drew, okay? These are the lines that you drew. Okay. Notice that when it breaks, how much volume comes through, right? That's the first indication that there's a lot of buyers there. But is it possible for you to predict that there will be a lot of volume here? Of course. You go back into the chart, okay? Okay, this is still your lines. These are your lines. And when I say your lines, I'm saying that you are the learning still. You don't know what's going on, right? Look at the volume in these areas. Look at the volume in the line that you drew. So I want you to pay very close attention to these lines that you drew. Let's click the picture. So when it bounced off those areas, like the blue there, in previous time, look at the volume that was there. Look how many people traded there. They're either stuck in that trade, they need to break even, or they need to cover their shorts, or whatever the reason is. Or the first one on the left there, where all the green volume is, there's a lot of people trading there. They're committed, quote unquote, to this entry. That 225 entry, that is your line. they're committed to this entry. They're now waiting for the entry. You could go back in time to validate your line. You go, hey, how many times did this touch this 225 line from left to right? Let's go. 1, 2, 3, 4, 5, 6, 7, 8. There's actually multiple times that it touched this line, right? Multiple. So that's the first way you can. That's the first way to validate how many times this line, how important this line will be is, look, the number of times it touches the line. So this line alone is touched multiple times, like more than twice, more than 3 times. And then we could validate it by volume. We're looking at the volume. And the question is always, how many people are stuck at 225 or want to trade there? Right? How many people are stuck there and want to trade there? We could tell by the previous area that they want to trade there. They're stuck there, or they want to buy there, or they want to sell there. Okay? So now, later in the year, right, for the explosion to happen, right? Now, that same line, those same people are coming back to trade it. What's happening that day, right? What's happening that day? They wake up in the morning and they're like, okay, the price is around 2. I'm either stuck big holding, right, that I need to sell at. Once it breaks, I'm going to be upset and I want to buy it again at support, right? Or I used to buy it at 225 and I want to buy more at 225, or I'm a short, I'm covering my position. So they're all committed to this entry. Is that clear there? And look at the volume that came through that day. Okay? That's that. I think I explained that right? Okay, and then let's go back to my lines. Those are your lines. Your lines are different, but they still make you money, right? Look at my line. My line is a little bit higher than yours, right? The reason why I chose this line is this. Actually, exactly. But because I'm a volume trader, I understand volume. So I'm going to put this in the red one, red circle, right? Volume, and this, okay? Okay, let's look again. This is on the daily time frame, and look at the volume bars here for me. Those are my lines. There's no right or wrong here. Those are just my lines. See, my line here, that 267, look at on the left there, look at how much volume. Those people are bag holding. There. They are committed to that 267 entry. They're committed. I know they're going to show up again later in the year to break even, or whatever they want to do there, right? They want to break even. They're going to cause that explosion to rip. So that's why I drew my lines there. I want my entry to be at 176, right? Right? Look at my support line, 176 at the bottom there. That's where I want to buy at, support, because previously at 177 there was an area of support, right? You guys can see that, right? At 177, it bounced off 1777 previously, and it ripped up. Now I'm targeting my entry at 176 because I know those people will buy it. I'm going to buy it there as well. I'm going to buy it at support. And if it breaks resistance, I know this is going to rip, because from previous time, from 267, I can see in the chart, the volume. Look how much volume came through previously, way on the left there, that volume. I can see that in the chart. So what am I trying to say here? Based on support and resistance and using volume, you could tell who's going to come back to trade with you. Is that clear there? I sort of butchered it a bit, but did I confuse anyone at this point? I might have confused myself a little bit, but does that make sense? So this lesson is important because you guys, drawing support and resistance is important for entry, and to figure out who's buying what and selling what where, and looking at the volume, you could break it down and see clearly who is committed. The word I'm going to use is committed to this trade, right? So let's look at this 1 hour chart. 1 hour chart. Okay. Look at this 1 hour chart. I'm only drawing now one line. this line. Okay, you're gonna be just as good as me. You're gonna look at this line, okay? I don't care about any other lines. This is the one line I'm gonna draw. Look at how powerful this line is in the chart now. We're gonna conclude this class with drawing. You're gonna be able to just draw one line that defines this entire chart. Look at this line. In a couple days before at 342, it bounces off 342 a lot. These people are committed now. They keep buying at 342. As it breaks 342, now they're bag holding, right? Bag holding. They're causing that resistance later in the day, right? Not later in the day, but later in the week. This is the hourly. I can see it. Okay, right? It's divided right here, right? This used to be support, and this is now resistance, right? Is that fair? I'm now drawing just one line to define the entire chart. Is that right? On the left, they were support. They were buying there. They became bag holders. Now they want to sell at 342. What am I doing? I want to buy back at 345. This is where it's going to rip. Does it rip at 345 later in the trading session? Of course it does. Okay, right there. Look at the volume that comes in. It's committed. They are committed. So what I'm trying to say is, as you learn how to draw trend lines and support and resistance, you're going to learn to just draw one line that defines the entire chart that you can trade off of. Because support is resistance anyways. Is that support anyways? It doesn't matter. Look at the explosion that comes in, and we could buy it there. That's just one entry. Is it possible that you draw another separate line than me? Yeah, of course. You could draw another line. So what I'm also trying to say is there's no right or wrong. There is only a time where you can't stick to your only trading plan. Is it possible that you draw a support here? Look at this picture. That's support, isn't it? It bounced off there, yeah. Is it possible that you drew your support line there and then now you're waiting for entry and that you never even got entry? Is it possible that you drew a line like that? Yeah, it is possible that you drew a line like that and nothing's happening. It is very possible. That's why it takes practice, right? Okay, so the class ends here at 1 o'clock. I actually went overtime, 1 hour. I didn't go through trendline analysis, but maybe I'll spend 5 minutes to do it. What were we looking at? CNET? Yeah, I'll spend 10 minutes because everyone has this trend lines, right? The word trend line is the overall study of charting, trend line analysis, trend line study, and support resistance is a type of trend line, right? Or the only trend lines actually. So here I'm gonna look at the chart. Okay, I'm gonna draw, here's congestion is 1, right? Here's support. Here's a trend line here, right? And okay, so if I break down the chart and we're trading, let's say we're only trading right here. This is CNET in the morning. Let's pretend that we don't know what's happening in the future, right? This is what? This is a bull flag, right? And I'm drawing my trend lines, right? I'm top lines together, all the angles, and it creates that trend line. And at the bottom, I'm creating that support line, that trend line, which is called the counter trend line, right? So those two create the flag. And once those resistance, the top diagonal line is broken, it explodes upwards, right? Based on the psychology we speak of, now we know why there's an explosion. When the resistance is exploded, we know why there's an explosion, right? Okay. So, and then as we go through the day, we don't chase the stock left, right, and center. We draw our first area of support, right? It bounced off there. We drew a congestion, right? We draw these. We have to draw them. We're charting. Look at this. We draw support, right? And then we draw that area of congestion, right? 741. then we're saying, guys, I think it's trading in congestion at 741. It's consolidating here a little bit. So my next entry will be over the break of 741, 745. What happens when it eventually breaks 745? The explosion, right? I glossed that over a little bit, but you guys understand it right now at this point. I want to be clear. Okay, I do want class to end at 1 hour. Okay. And plus the homework, it supplements it. Right? That area of congestion, that's red circle there, is critical. We drew this, we saw this in another picture. We never trade in it. We have to wait for it to break. Okay. So here's something else. Look, is it possible that you drew these trend lines? Look, you're connecting all the top lines together and you drew this. Right? Is it possible? I think I did this. I made this mistake today, right? And I'm thinking the explosion was to happen here. Is it possible? This is before we go. Look, before we go, is it possible that I'm connecting the top, the swing highs is what they call it, the diagonal swing highs at the top, and at the bottom, the swing lows together to make that pennant shape, and I'm asking for an explosion there? Is it possible that I draw that and I'm waiting for an entry and nothing happens? I want you to, this is really important. Yes, it is possible that you draw the wrong lines. If you draw the wrong lines, nothing's going to happen. And then you just have to say, I have to redraw them. I have to figure out who's going to trade it with me, who's going to create that explosion. The explosion comes 15 minutes later when the line is redrawn, just like the first picture, the congestion area. That's the explosion. Drawing this line doesn't help me. Is that clear? So this will take practice. Okay? Yes, sometimes you will draw the wrong lines and nothing happens. That's critical. Okay, so that's it for this today. I mean, trend line analysis, that's basically what it is. Okay, at this point, do you guys have any questions? No, I'm gonna end my my class here, my lesson, but here's your chance to ask me questions or ask TJ or ask somebody else, like Jim. Is Jim online? Because Jim draws support and resistance like no other. He's very good at it. Okay. Oh, and before I take questions, okay, type your questions here. Before I take questions, I wanted to thank, and I forgot, I wanted to thank, there's a lot of people behind the scenes. This is a free community behind the scenes working to keep this community free and making sure that you guys know where when the lessons are, what's important and posted. And those people are like Old 22, right? Please thank them. JC, right? Ziggy, right? Creating the bots for us. I mean, not him. Ziggy, right? Francis. So there's a lot of people behind the scenes doing all this for us, okay? To keep us in line. Okay, so I'm gonna start asking questions. Ace of trades, easy stuff. I'm here. What time frames do you use? Okay, what time frames do I use? I use depending on my strategy. If it's just a scalp for day trade, I'm just gonna look at the 1 hour and below, 30-minute, 5-minute, 2-minute. I'm gonna look at it all because each time frame reveals another truth, reveals something else about the market. You're gonna see something in the 5-minute chart that you cannot see in the weekly chart. You cannot see it. There's not enough data, right? So I learned to use it all, compile the information together. When I do my swing trades, I do weekly, daily, 4 hour, 1 hour. Okay, that's just my strategy. I don't recommend anyone to copy my strategy. Use your own, develop your own. Okay, what other questions here? If you're at high day, how do you know when to sell? Well, TJ always sells at high of day, right? That's an area of resistance. There's selling pressure there. So he's selling there. Okay. Vegas, on the other hand, will hold through high of day for the break. So there's different strategies for different people. TJ will buy over the break of high of day. Again, he will rebuy. Vegas will hold through high of day and take that chance and for it to break the high of day and hold. So there's actually no right or wrong here. It's up to you how you want to trade, how you want to build your portfolio. Okay, what else? Did I miss? Yes, the webinar is recorded.
Oh, Cuban has a nice question. Do you always rebuy with less shares?
Oh, you can answer that. You answer it.
Depends on the setup. You know, if we made a higher day, we got our profits and it dipped and we're looking for like a good dip buy or a knife catch, I'm using less shares. If it's something with a lot of volume and I think it's going to be breaking resistance points and it's like blockchain, then no, I'm going to be using the same amount of shares.
So this is, okay, so this is support here. This is a trend line support. This is a diagonal support line. This is a trend line, okay? It's bouncing off the trend and it's moving upwards, okay? This one line defines this chart, okay? This line alone, we could tell that this line is bullish. It's upwards, right? People are buying here and they're respecting. The word I'm going to use is respecting this line. So we can continuously buy until this line breaks. As this line breaks, those people are gone. No longer holding up this line, holding up this move up. They're gone. So we cannot be in the trade. It's now bearish if this line breaks, right? Because if this line breaks down, it will go down. Why? Because people are gone. People who bought here, 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 are no longer here, right? Look, people that bought 1, 2, and 3 are no longer at the last area, so they are gone. So this will break down, that we have to get out. That's just trendline analysis. You can look that up. I won't finish it here. Okay, any more questions? I butchered it a little today. Trading swings, helping us. So, okay, for tech trader, learning wedges and triangles like that. Okay, so when we do the pattern breakout class next week, I believe it's coming up, I will tell Eric to talk about trendline analysis so that you could learn how to draw those patterns quickly on the chart, okay? So we'll cover that anyways, since I missed it today. Can you show volume on CNET? Oh yeah.
And one thing I'd like to add about trend lines, just because it's been following a trend line doesn't mean it's going to just stay on that specific trend line. Like Bloom posted that last picture. You know, sometimes it can come and dip below your trend line and come right back up. So you really want to have a stop loss that isn't too tight, because if you do, you're pretty much saying that you're not accepting the risk that's involved with this trade. But it's very important to see if it actually comes back. And most of the time it does. A lot of people get stopped out by just having a stop loss underneath the trend line. Just have it a bit more looser, I guess.
Yeah. Okay, I'm just quickly going through the questions. I don't think there's a lot of thank yous, which is good, but I don't need it really. Where's the questions? Okay, so at this point, is there anyone confused? And can anyone go practice these lines? Right? It's actually just connect the dots. I didn't want to say it because it's going on YouTube. So many technical traders will say, oh God, you never tell other people that. Yeah, but it's truly just connecting the dots. You're connecting them and saying, oh God, look, I made a really good line because I connected 5 lines together. 5 dots together, right? Okay, so that's a really good question. Let's go through that. Grande Hugo, okay, he got in at 710 before support broke, and it dropped to 670s, and it got stopped out. That's it. That's it. The point is, you got in at 710, you respected your stop loss, and the thing is, you can't predict the future. That's the truth. This happens to trading all the time. But what needs to happen in the future is that you always use a stop loss, no matter what, because you can't predict this move. Once support is broken, there's so much selling pressure. This can go down for days. You will be stuck if you don't use a stop loss. So there's actually no indication that it will bounce, because we actually don't know who's going to come back and buy. We explained that in the beginning. We don't know who's going to come back and buy. Okay, so that's in the Mark Douglas videos. Ooh, and guess what? I'm going to download these for our group and put it on my Google Drive, because somebody re-uploaded his earlier versions right here. Oh my God, what a gold mine. Okay, look, there's part 1 and part 2. These are these very earlier versions of it. So for diehards. Okay, so what other questions? How can we avoid false breakouts in trading? We can't. There's no way to predict that the false breakout will happen. We can't predict it. We have to play every breakout. If you watch the Mark Douglas videos, each breakout, we actually don't know who's going to be there to buy it with you. We don't know. You cannot know. You can tell from the chart, from the volume prior, that there is more commitment to this area in terms of 3 months ago, there was 1 billion people who bought it at $3. Those billion people want to be here at the $3 mark to either break even or to cover their shorts. But it's very possible that the guy that bought